Testing something. There we go. There we go. He's testing something, so he wants me to go live on YouTube, see what happens. Testing something. There we go. There we go. All right, there we go. He's testing something, so he wants me to go live on YouTube, see what happens. We find the 5 o'clock candle, the New York fix on last night. All right. And we come over here and find that candle. Testing something. There we go. There we go. All right, there we go. He's testing something, so he wants me to go live on YouTube, see what happens. We find the 5 o'clock candle, the New York fix on last night. All right. And we come over here and find that candle. Testing something. There we go. There we go. All right, there we go. He's testing something, so he wants me to go live on YouTube, see what happens. We find the 5 o'clock candle, the New York fix on last night. I don't know what's going on. There we go. How about now? Everybody good? Should be. Okay. Go up 73 pips, 73 pips. And there we go. And there's the target. Now, the question is, do we have 55 pips left? It is absolutely imperative that you understand that you have to have 55 pips or more wide open space, or you do not have an opportunity. So I'm going to check that to see. All right, I got a 55. That's the default for me, so it always does that. And there we go. All right, so you can see we won't have a trade. All right, why won't we have a trade? Well, it's because of this. All right, we have to break the flag. The flag pattern is a break, hook, and go up here, right there. There's where the break, hook, and go has to happen, right in this area, right? Come on. Right there, break, hook, and go. We don't have 55 pips to the target if that happens. All right, so there's nothing to do on euro dollar. Over to pound dollar. All right, pound dollar. We do have some space here. Let's see. We did put a low in. However, after that, this was the 5 o'clock yesterday. It's now down here, all right, because of the new low, which puts us at the high. All right, so let's see if we even have 55 pips left. All right, so here's what happens to a lot of traders. They don't realize this. And they come in here and they see an opportunity, then they don't realize they don't have 55 pips. Well, if you don't have 55 pips, neither does a banker. And so a banker stays out of the trade. Now, don't forget, he made the market, so he got in down here. He's in the trade, but he can't make the rest of the trade except for his entry orders. All right. Now you come in here and you think there's a lot of room left, and there isn't, and they quit and they go put a bull flag in, and you get stopped out, and you go, the broker stopped me out. No, that wasn't the problem at all. All right, let's see if we have 55 pips. We go to the target and we go down for 55 pips, and we're a seller here, and there we go. Okay, so we do have 55 pips on this one. All right. All right, it's coming down right now. You can see MACD has made the turn over here, and right there, making the turn to the upside. All right, so we're looking at that opportunity right there, but we got to have 55 pips. So this is where it is right here. So this is very close to happening. All right, so how do we prove that we should take that trade? We use the 3 Musketeers. All right, now the 3 Musketeers are these charts down here. They're Heikin-Ashi charts. They tell us 2 pieces of information that we can't get any other way. They tell us what is the order flow today and who's in control of the currency on that time frame. What do we care what time frame? The big boys, 240 world, they're buyers. 60-minute world, they're buyers. The bankers are buyers today. Order flow is up on the 10-minute chart. All right. Then we get the chance to validate that with the oscillators. Okay, they were going up over here. They were going up. They are going up. They were going up. All right, see that? All right, so what are they telling you? We're going up. All right, so let me clear all drawings. All right, so a pullback here gives us the opportunity, or right here, and there it is. That's the opportunity. Now, how do we trade it? Trade 1 is here, and you got to take it on this line or below it. Trade 2 is above it, right there. Now, what does that mean? That means we have a snowman. What does a snowman mean? That means that this is trade 1. This is trade 1, and this is trade 2. How do I trade it? You trade 1/3 of my lots here with 3 times the stop. All right, so you see there's support there. So 3 times that would be down here. So your actual stop is put here. Your actual risk is only here. All right. Now, when the second trade comes in, which is 2/3 of your lots right here, this goes to break even or better and holds for the target. And what that does is trade 1 produces profit to cover the risk of the 2/3 you got at risk here. We look for a snowman because if we're going to put the most of our lots at risk, we want it in the biggest area. All right. So that's why you do that. All right. All right. So pound dollars on the table, and we'll see what happens. All right. Over to dollar Swissy. Dollar Swissy, we just broke to the downside. We anticipated this yesterday. They never went anywhere. Now we are going. Let's see what the ATR is, 74 pips. We find the 5 o'clock candle from yesterday right there, and we put a new high in after that. So we use the new high, and we go down for 74 pips. And there's the target, and you know we don't have 55 pips left. All right, you can see it right there. You only got about 30 pips left. Nothing to do on that one. Dollar yen. All right, now dollar yen has been following the dollar. All right, and it can go either way. All right, so dollar is showing signs it's going down. All right, but excuse me, but dollar yen is showing signs it's going to go up. All right, see, all right. So let's look at it in a 240 world. Now we understand it. All right. So what's happening here is that they have to get out of this up move. Takes them a while to do that, and then back into a down move. Now, before they can go down here like this, they have to have all the buys out from over here. So we go check and see how many buys do they get out of here. Right. So first thing is to see how many times they put the money in. All right. So you can see the money came in right here. Money came in here. Money came in here. And money came in here. It's actually a little bigger. 3 times. All right. First money came out here. Second money came out here. All right. Where's the third money coming out? It may have come out here, or this may be a pullback, or they may not be out. So that's the reason that this happens. This is why it takes a long time to do reversals, because at the bank level, money doesn't come out of the market. Money goes into their account, but how do they do that? They do a close and reverse. Close means whatever buy we had in here, we closed it and we instantly entered a sell, and we close and reverse. Whatever buys we had in here, we instantly sold them, got rid of them, and entered it the opposite way. All right. When they close, that puts it in the bank. Reverse puts the exact same amount of lots at risk in the new direction. All right, that's why they're called market makers. Now I'm going to take this off for now because we made this could also just be a flag pattern, as you can see right here, and this might only be a flag for the downside move. So do we know what it is? We don't know what it is, but the move up makes sense to go down. So either way, if we're going down, we like it. All right. Now we do have another problem that we have to address. All right. We have divergence, as you can see. All right. That says we're going up. All right. So now there's a lot of questions on this one. See, you just don't go in, oh man, it's green, I'm buying it. Yeah, there are too many questions here. All right. All right, let's go see what the 3 Musketeers say about it. And the 3 Musketeers say, we're trying to go up. We're trying to go up. The order flow is up. We're trying to go up. The Pados say, all 3 of them say, we're trying to go up. That's what we call a royal flush, right? The whole chart says we're going up. So they're telling us they're going up, right? See that? And yet the structure is for a down move. So what do you got? You got a lot of risk in this trade, all right? And these are trades that traders trade because they don't know how to do price action, all right? So there we go. All right, so let's take a look and see where our target might be, all right? So we pull up the ATR and bring it back over here again. There we go. And dollar yen has a 95 pip ATR. We find the 5 o'clock candle from yesterday. It's 1600 for me, right? And there, right on this red candle right there. And we put a new low in after that. We take the low and we're going up for 95 pips with a lot of caution, right? So no, nothing to worry about. It already did it to the pip. See that? They did their ATR to the pip. Not here. All right. Trade's gone. All right. All right. Over to Aussie dollar. All right. Now it should be trying to go up. As you can see, it's got a corrective move right now in play. And corrective move is an A, B, and a C right there. So we've got an ABC already in. Put a line across here. We got a bull flag for that move. However, MACD tells you, you better look for the sell. All right. So now we got to prove that. We got a contradiction. All right. We got a bull flag for the up move, and we got MACD saying we might go down. How do we prove that? See, this is where the three musketeers absolutely bail you out. All right. And they say, no, we're trying to go down. No, we're trying to go down. No, we're going down. What do they say over here? We're going down. We're going sideways. We're going down. They're telling us they're not done with this pull flag. See, that's what it tells you. See, you have to get the clues from the chart. You don't get the clues from a guru, and you don't get the clues from your RBI, your RSI, so whatever happens you have to be using. None of that works. All right, so we'll look for a continuation down here, and we won't make that trade because it's counter trend. See that? And there's a lot of risk. They may have put the ABC in. This may be a little move to get some more buyers in and go right now. All right, so we're going to go up here and we're going to find the target to the upside, but we won't trade it to the downside because you can see there's only the 25 pips there anyway. All right, so 68 pip ATR, find the 5 o'clock candle from yesterday right there, and we put a new high in there. So we go up to the high and see to the downside, and you can see that they, in order to get that ATR, they got to break the channel, and then there's no room anyway. All right, so that's the down move. Let's put the up move on now, and 68 pip, and we put a new low in here if that is the low. All right, and we go up for 68 pips. All right, now we will have a trade to the upside if it gives it to us. All right, so I'm going to put slope support across here, right there. And a break in this area, we got 55 pips. All right, so let's go see what the three musketeers say about it. And we already looked at it. Sorry, yeah, they say we're going down. So when we finish this move, which could happen anytime, right? And we finish this move, there is the opportunity right there. It's over 60 pips. All right, so where do we get the trade from? All right, trade one is going to be here, right there, to the top of these wicks right here, and then trade two is here. Right there. All right, Aussie dollar, if we get it, and to the upside, and it's not done down yet. All right, over to Euro Yen. Euro Yen, big sideways movement. They have filled the gap now, and we got plenty of room to the upside. As you can see, it's about 180 pips up there. We're trying to push up, and it goes opposite the dollar. We know dollar's trying to push down. You can see that MACD is talking to you already and saying, yeah, we're starting to move back up right there. This is headed up. All right, so there we go. All right, so let's see if we can prove that. All right, we go to the three musketeers, and they say, here's what we're trying to do. All right. Here. We're trying to go up. 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 Gee, I think they're trying to go up. All right. So we do have a channel. Let's go ahead and put it on. It's pretty shallow, but it is here. All right. Heart line, heart line, heart line, heart line. Okay, good. All right. Now you can see what's the problem. We're going to slam into the heart line. Yeah, there's a big wide open space before. Now there's not, because there's a channel running in through there, and it's proven because they know where the heart line is. So now you see, wow, we got problems. Yes, we do. All right. Euro Yen, ATR is 119 pips. We'll find the 5 o'clock candle from yesterday right there. We put a new low in just after that. We're going up for 119 pips. And there we go. And there's the target. All right. Now you can see you don't have 55 pips anyway, but right now, but here's the deal. If they come up here, don't hit the channel, pull back down to here. And now we will have 55 pips to here. Right there. All right. So EJ, it's there, but you know, it's not that great, right? Now, what are we looking for? We're looking for low risk, high reward. Low risk. All right. So far, we found a couple, but they are higher risk. All right. So we're still looking for a low risk trade. All right. Here's the pound yen underway, pretty well already gone. We don't have 55 pips left from there. I already did it this morning. And so there's nothing to do on pound yen. It's already happened. We don't have 55 pips. New Zealand dollar. All right. And New Zealand dollar made the turn. All right. Now, see, this is why you draw this line. We did it yesterday. Remember, I said every time you get a rising wedge on, you draw a perpendicular line equal to that here. And that tells them if they're doing a channel, they're going to bounce here. What did they do? They did a channel. All right. All right. Now, New Zealand dollar goes opposite of the dollar index. All right. What does that mean? It's probably going up. So I'm going to now get rid of this rising wedge because it most likely is not. All right. And now you can see that you're most likely in a triangle right there. That is up. How did I get into this triangle? I got in going up. How am I coming out? Going up. All right. With dollar going down, does that make sense? Yes, it does. Let's go see if the Three Musketeers say that. All right, so we go over here and we go, Mr. Three Musketeers, what are you thinking? All right, and Three Musketeers say, yeah, we're going down. We were going up. We're trying to go nowhere. We're going down. We're going up. We're closing up to go up again. All right, so that's what happens when you're in a triangle. It gets wishy-washy. So you never trade inside a triangle. Now you're going to get caught in them all the time, but you don't actually try to trade in them. Once you get in, you're caught in one. All right, you only trade the breakout either way. All right, since dollar's down, we're going to look for up. All right, 62 pip ATR. By the way, if you're not watching the dollar, you're not trading, you're gambling. Find the 5 o'clock candle from yesterday right there, but we put a new low in. So if we're going up, this is the new low for the day. All right. Now, one thing I want to check is, did they do their ATR to the downside last? Come on. Trying to get rid of that. Remove and remove. It's a new drawing tool, so I'm having trouble with it. All right. All right, so let's see if we did it to the downside. All right, so 1600s right there. We put a high end up here. All right, so to the downside, did we do 62 pips? Because if we did, we've already done the ATR. All right, and there we go. And you see, we didn't do 62 pips. All right, so we're going to get rid of that because we're not interested yet in the sell. All right, although we just got a zero line break. But as long as the dollar's going down, the New Zealand dollar can't go down. I say can't. Maybe 98% of the time it can. 2% of the time it can. And do whatever it wants to when it wants to. All right. I can get a 1,000 fib on here by the swing low to the swing high, back to the swing low. And that gives me the 1,000 right here. Why do I care about that? Because bankers care about it. Whatever this is right here is what they're going to try to do here. That's 1,000. That's why you look for the 1,000 every day. All right. That's one target. All right. Then where's the next target? ATR. All right, we go grab the 5 o'clock candle. We already know where that is, but we put a new low in after that. So we're going down here and we're going up for 62 pips, 62 pips. And there's the target. All right, do we have 55 pips left if it breaks out up? So I go to the target, go down for 55 pips, and I will not have a trade. See, I'll be back inside the triangle. All right, so we don't have an opportunity here. Let me get rid of that. So New Zealand's off the table. And you go, man, I see all kinds of trades. There are very few trades. One thing to remember is there's typically only one or two real opportunities per session. One or two. What? Yep, that's correct. Let's go up to the 240 and look at this one. And you can see we're at the top of the range. We only got about 40 pips to the range top. This is a pretty tough one right here, as you can see. All right, let me get rid of this line. All right, So back down to the 60, and it should be trying to go up because it goes opposite the dollar. Aussie yen should try to go up. Let's see if we can find the target for it. Aussie yen, 98 pip ATR, decent ATR, 1600 is right here, right there. And we did a new low after that. So we used a new low. We do 98 pips to the upside, and there we go. And there's the target. All right, now you can see that it's an opportunity. Okay, let me get rid of this one here. Do the latest one. I'm going to do swing low, swing high, swing low. Swing low, swing high, swing low. All right, and now I get the 1000 right at the ATR. All right, so now you can see there is a wide open space, but the problem is that range top right there. What do the Three Musketeers say? And they say, yeah, we're trying to go up. We're trying to go up. We're trying to go up. We're trying to go down. We're trying to go up. We're trying to go down. All right. So they're not quite ready to go yet. You can certainly make a case that this is a flag pattern right here. There's a flag. So that's the trade up there. So that would be the trade right up. Oh, gosh, right up there. All right. There it is. All right. Now, what's the problem? Now, you can trade this if you've got the skill level, all right? Because it has plenty of room. Here's the deal. Trade one, if you get the breakdown, if it comes back down in here, that would be perfect. That would be really nice because then we'd have this and then we'd have this, all right? That would be really nice. But it looks like we missed that already, all right? So what do we want? All right, we're going to have to trade it. Break hook and go here, and trade two is there. All right, so you can see it's not that great a trade. It's there, but it's not that great. We'll put it on the board to look at it, but it's not that great. Now, if it pulls down, aha, then I'm all over this because there's the trade if it pulls back down. You can see the difference in the trade. Trade one is in the small circle, trade two is in the big one. That's a much better trade. So what you want to do is you create criteria, say, I'm not going to trade you if you break out here, but if you pull back, I am very interested. And then you wait and see if they pull it back. If they pull it back, do a close and reverse, you're in. And now you got a great trade potentially on the board. All right, Euro Aussie. And Euro Aussie, and we are, MACD says we're a seller right now. We have a zero line to the downside. It's quite possible that you have a flag pattern building right now for the continuation to the downside, right down here, right there. All right, so let's go see. How will we tell? Do we know it's going up? No. Do we know it's going down? No. We got a higher probability of going down. All right. That means it would have to follow the dollar index. Is it following the dollar index? Okay. So let's go see what the Three Musketeers say about it. And they say, we're trying to go up. We're trying to go up. We're trying to go up. Look at that. Trying to go up, trying to go up, trying to go up, trying to go up, trying to go up. See that? All right. Wow. That's how you get it wrong on MT4 and TradingView. That's how quick it can happen. We're going to put slope resistance across the top, and you can now see we are actually in a breakout. All right, I can find the 1000 fib from the swing low to the swing high, back to the swing low. That gives me the 1000 up here. Dollars pushing through. Thanks, Daniel. All right, so Euro Aussie ATR is 127 pips. Find the 5 o'clock candle from yesterday on a 60-minute chart right in here, right there. We put a new low in down here. We get that new low and we go 127 to the upside, and there is the opportunity. Now the question is, do we have 55 pips left? All right, so you had 55 down here, but it looks like we don't have it here. Yeah, pretty tight. It's pretty tight. All right. All right, so if it comes up here, pulls back down here, all right, then here's the opportunity. You can see it right there. Trade one is going to be right here. Come on. This will be trade one right here. And this will be trade two right there. All right, so there you go. But you're going to have to take it on the pullback. All right, it has to pull back to where it says limit. It has to be equal to or below that before you can take that trade. Euro Aussie on the table if we get a pullback. All right, now we're getting a hint on what might be happening on the dollar going actually committing to the downside move. There it is, the push, as Daniel noted, there's the push through. So we're underway. All right, pound Aussie now. That should continue on up. It sure has. All right, now we don't have anything left here. All right, right there. There's no 55 pips left, but it was a blog post this morning, so we'll see if traders got in it or not when we do pip captures here in a little bit. All right, nothing to do now. It's over. You're in New Zealand, all right? Now it's running a little late. This is good for us, most likely. All right, so you can see we're in a big box. We did this yesterday, the real estate of the week trade. We did it in class. We're looking for this R8 right up in here, or maybe the day chart top. All right, let's go down to a 60. All right, and you can see we're just moving out of the flag. All right, so there's the flag right there. There's the push out. You wait for a hook and a go. All right, Euro New Zealand, 138 pip ATR. Find the 5 o'clock candle from yesterday, 1600. We put a new low in after that. We use the new low and we go 138 pips. 138 pips, and voila, we don't have 55 pips left. Bye. Pound New Zealand. All right. Pound New Zealand. What does that mean? Well, you were perfect in the New York session, in the London session to get those trades. Now half the trade or more is over with from London, and here we are in New York. And that's why the New York market is the hardest market to trade, but it is the #1 market to learn in, because the market is going to do everything it can possibly do in the New York market. All right? In the London market, it has a tendency to just get up and go with the agenda right away. I mean, a lot of times you're sitting there watching that 3 o'clock candle, and as soon as it turns 3 o'clock, boom, it screams. Why is that? Everybody's waiting for it. That's it. Ian, now, yes, right now it is, Mosin. Remember, correlations are not, they're not set in stone. They're just a heads up for you. Right now, all right, they're going opposite of the dollar, right? It normally goes with the dollar. Right, but last night the dollar went up, and Euro Aussie went. Pound Aussie went down. See, so it's going opposite. All right, that's a job of a trader to figure out if it's correlated or not correlated. Could be, could not be. All right, so those things are not 100%. All right, the correlation is typical. All right, now when you have an actual dollar in the currency, New Zealand dollar, Aussie dollar, pound dollar, now it has to go opposite of that. Why? Because the dollar is the other side of the currency. All right, so if the dollar is going down, then the New Zealand has to go up against the dollar. See? All right, so no room here on that one. Euro New Zealand, and let's check and see if we still have any room here. All right, we started low. We don't. I don't know. Let me look, just out of curiosity, make sure that we don't have 55 pips left. And so, nope, we don't have 55 pips left. Bye. See ya. Pound New Zealand. So last night I had it to the downside because the dollar was going down, right? And it was following the dollar down, right? So now what's it doing? It's going opposite of that. So we get rid of this, right? And we find the Pound New Zealand. You have to constantly be checking your charts because they're changing every time a candle shows up. Might be most of them. Well, no, an ABC is a corrective move to keep doing what it was doing. Right. So it could be a 1, 2, 3. Right. So ABCs happen against the trend. Right. And so this is sometimes hard for traders to get. Let me see if I can find one here. All right, here's one right here. All right. So ABC is a corrective move. Right. So it goes up, it goes down, goes up, it goes down, and then it goes up. There's the corrective move for the downside move over here. See? All right. All right. Now we're going back up. Let's see if we have any room. Pound New Zealand, 151 pip ATR. Find the 5 o'clock candle on a 60-minute chart, 1600. Right there, and that is the low for the day. All right, so we're going up for 151. Once they hit that number, they never look back. To the pip, to its ATR. To the pip, right there. All right, nothing there. It's already happened. It was a great trade during the night. All right, now here you go, Mosin. This might be an ABC when they top out up here for the down. All right, What tells you not to look for that? All right. So the pattern says that. What says, hey, be careful. I don't think you should look at that. See what the MACD tells you? It says, don't even think about the sell. Don't even think about a sell. All right. So that's why the MACD is, it is predictive. All right. That is one of its job. But the other job it has is it keeps you out of bad trades if you have a good MACD. All right, our MACD is 82% correct, all right, which is pretty high. I want MT4. Okay, it's 66%. All right, it's not as high, but it's still pretty good. All right. Nothing there. New Zealand yen. All right, New Zealand yen. As we thought yesterday, remember we said we're not going to take this trade. You're in the top of the range. It should turn. Sure enough, it turned. Now the question is, you just got a zero line break to the upside on the MACD. So the question is what were they doing? All they doing was changing the trajectory of the channel? Most likely that's correct. How do I prove that? All right, I go to the Three Musketeers, and the Three Musketeers will tell me what the currency is trying to do. All right, it's trying to go nowhere. It's trying to go up. We're trying to turn it up. We're still going down. No, we're trying to turn it up. We're still going down. So they're trying to turn it up, but it's a little early. So the target is above the range. All right, don't get that. Don't remember that you're in a range. So this could be a move to take out another sell, a buy, and go into the sell. So you don't want to trade it below the range. You want to trade it above it. So the question is, do we have any room above it? 93 pip ATR. Find the 5 o'clock candle from yesterday, 1600. We put a new low in after that, which is this low. We're going up for 93 pips, 93 pips, and there's a target. All right. So above here, do we have 55 pips? We go to the target and we go down for 55 pips to make sure. And we have exactly 55 pips. All right. So now we can figure out how to trade it. All right. Well, first thing I need is to find the 1000. So I'm going to take the fib. I'm going to go from the swing low to the swing high, back to the swing low, right there. The 1000 is just on the other side of the ATR. So if we get this trade, you trade to the ATR and hold for the 1000. All right. Now we can see the trade and how to trade it. All right. So here's the trade all the way to the 1000. We're going to be above this line right here. So trade one is going to be right here. Trade one is here, right? And trade two is here to the 1000. So now you see the snowman. All right. Remember, the trade one is in the head. I mean, right here. Trade two is here. 1/3 of my lots, 2/3 of my lots. 1/3 of my lots with 3 times the stop. When the 2/3 goes in, stop goes to break even, and I hold for that target right there, and then hold for the next. All right. And if you do that, you'll make 150 pips. If you're a normal retail trader, you're going to grab 5 to 8 pips and get the heck out of the market because you don't know where it's going. You don't know what they're doing. I know how to make a trade. I just don't know why. All right. I'm going to put the new channel on here because it's been adjusted and use this last piece right here. And you see, they know where the heart line is. See, so use that last piece. You don't constantly keep your lines on because they're pretty. What you want to do is keep the lines on that say what it's doing. All right. New Zealand yen's on the table. Not too shabby. It's a nice little trade. You know, remember, it's got FOMC today. We can't trade Aussie Swissy or Aussie New Zealand because the ATRs are less than 55 pips. So there's no way you can trade it. All right. Pound Swissy, however, is a different story. All right. Now, Pound Swissy, half the time goes with the dollar, half the time it doesn't. So are they going down right now or are they trying to go up? You just got a zero line break to the upside, but you also got a zero line break to the downside. So the zero line break to the downside occurred at the bottom of the move. Therefore, they have to pull it up because professional sellers won't sell at the bottom. They'll sell at the top. So the question is, are you going down or are you going up? And you can't get that information from the chart. All right. So where do I get it? The Three Musketeers. That's why they'll save you like crazy if you'll let them. We're trying to go down. No, the order flows up. No, we're trying to turn it up. We're trying to go up. We're trying to go up. We're trying to go up. See? Oh, now we know we're going up. All right. I'm going to put slope support resistance across this top right here. There we go. And up in here, I'm a buyer. I'm not a seller here because I'm not going down. And I don't have 55 pips to the bottom of the range, which they've already proven to you twice that they respect it. All right, so the trade is to the upside. All right, pound Swissy, half the time it does that against the dollar, but it only has a 58 pip ATR. We go to the new low after 5 o'clock, which is there. We go up for 58, and you see there is no trade at all. This is all we got left once we break out. All right, now, if you're new in here, how many times would you have been tempted to make a trade when there wasn't one there? Just think about that for a second. All right, it's because you have to learn price action. Price action tells you where the trade is hiding. All right, it's like the FedEx logo. All right, so let me get it up here because it makes it simple. Here we go. All right, so can you find the arrow in the FedEx logo? It's right there. See, now if you've never seen that before, once you see that arrow, you will never not see it again. All right. That's what price action does. It shows you where the arrow is. Yes, it's a FedEx logo. I didn't see the arrow, but now I see it like crazy. Right? That's what we're doing over here. Same kind of thing, trying to find where that arrow is that has an opportunity. We found the pound dollar. If it pulls back down and goes again, well, it's gone. So that's gone already. All right, Aussie dollar. If it pulls back down, and break up, if it finishes this down move or it breaks out, either way, we have that opportunity right there. All right, but nothing right now. We have EJ potentially. All right, no, we don't anymore. See, it's gone. You had to take it down here. See, they took it down here. There's a close and reverse and another 2 close and reverses right there, and that's where they took it. All right, because they buy at the bottom. They buy at the bottom. All right, where does dumb money buy? They buy at the top and live to the pullback. Buy at the top, live to the pullback. That's what they do. All right, so you got to stop it. That's. I'm not calling you dumb money. That's what bankers call us. All right, so EJ is gone. Nothing there now. All right, so we're down to Aussie dollar. Let's go take a look at AJ. AJ, it's a dicey trade, folks. I mean, it is there, but it is a dicey trade because of that range top. So I'll stay out of it. You can trade it if it's your go-to currency, you should trade it. Right? But if you don't, and remember, it's only 1/3 of your lots. What if it doesn't break up there? Well, it's 1/3 of my lots. All I got to do is get the break even. And you say, well, why don't you just take those profit instead? Take that money because it messes up my average pip capture, and my average pip. Hold on, the wrong thing here. I don't know why that's not showing up. You have to have an average 65 and 35. All right, let me pull that up for a second. All right, the magic numbers for success: 65% win ratio. Now I want you to think about that for a second. That means I lose 35 out of 100 trades. 1 out of 3, I'm going to lose almost. See? I need a 35 plus pip average pip capture. If I have a 35 or higher average pip capture, then I can handle the 35 losses I get over here because my losses will not overcome my wins. It's very simple. All right. The only way to get to 35 plus pip average pip capture is to press your winners without exception. In order to do that, you got to have 55 pips or more. See? All right, there's a reason we do everything. It's to get the math on our side because we're retail traders. We got to trade small accounts against billion-dollar traders. All right. So how do we put the odds in our favor? This is how you do it. So why do I want to break even? Because if I take 6 pips, it drops this 35 pips average down. See? So I get to break even and I sit there. It either goes or it doesn't. All right. Now, if you get a break even trade that gets taken out, right? How do you think about that? All right. No, the way most traders do is I should have taken those 16 pips and I'd have 16 more pips in my account. That's not a professional. That's a gambler. All right. The retail trader who has got it going on realizes that a break even is as if it never happened. It's as if it never happened. All right. All right, so Aussie yen, be careful. But if you're now, don't miss it if it pulls down. If it pulls down into here again, now that would be a great opportunity, because that would change how the snowman looked. This would now be trade 1, and this would be trade 2, and that would be awesome, because you've got trade 1 in the profit. Let me get it up here again. You got 1 profit when you hit the range top, and you got 2 in profit when you hit the range top. What if it doesn't go? Move your stop. And now, you know, you got 2 lots here for 30 pips. That's 60 pips. And you got another 30 down here. That's 90 pips plus another 30 here. That's 120 pips. And you didn't even get the second half up here. See? All right. And if you get the second half, you're going to make almost 200 pips out of the trade. Wow. That sounds like what I ought to be doing. That's right. That's what you ought to be doing. A lot of more risk on this trade unless it pulls back. All right. Euro Aussie. All right, we're just getting our break now. Okay, so the break up here, all right, gives us the ability. All right, this should stop it right here and send it back down. Remember, we got to be here to get 55 pips, but because we already have a break, we can go to the 10-minute chart and we can watch it. Ah, see, it already happened. See that? See, there's the break and hook back to get 55 pips. All right, did anybody trade it on the hook? Anybody get Euro Aussie on the hook back down? That's what, remember, that's what we said. You got to do a break, hook, and go. Well, it did that. Anybody in it? All right, nobody's in it, and now we don't have 55 pips. So it's off the table. But we'll keep it on there just to watch it, just in case it comes back down again. All right? If they run out of buyers, they will. All right? Let's go look at the NJ. That's it. Not much to trade this morning. And most of it's not real good. Why? Because of where we're at. We're at the top of ranges. The trade is up here. Are we above there yet? No. But if we break above here, there is an opportunity there. And that trade will get you right here up to the 1,000 right there. And trade 1 is here. Trade 2 is here to the 1,000. So there's the snowman. Right? There you go. New Zealand yen, not too bad if it happens. All right. And God, we just don't have much at all. All right. We got New Zealand yen, a possibility on Euro Aussie if it pulls back again, only if it pulls back. All right. And we got what else we got? Aussie dollar. All right. That's it. 3 currencies is all we got, folks. Aussie dollar has to break up here, not showing any sign of doing that. Right now, with the dollar going down, what are they doing? Why would they be going down? The dollar's going down. Why are you going down? To find buyers. Why are they going down to find buyers? Because professional buyers buy at the bottom. Professional buyers buy at the bottom. Professional buyers buy at the bottom. Right? Professional dumb money buys at the top, lives through the ABC, and then they get stopped out, and the currency goes right where they thought it was going to go. And they go, the broker stopped me out again. No, he didn't stop you out. You bought at the top, buy at the bottom, sell at the top. All right, nothing happening there. Euro Aussie. Yeah, it's got to pull back, or we don't have 55 pips. Dang, it's too bad. Too bad we missed that one. Oh well. And we might get it again. All right, so just 3 currencies: Aussie dollar, Euro Aussie, and New Zealand yen. That's all we got. All right. So we got a couple of pip captures to get. Larry, would you get them for us? Thank you. All right. So the first thing I do every day is at 5 o'clock, I'm here around that time, and I tell you what I think the currency is going to do. All right. So let me get a arrow on here. Now that feature I like. All right. So I have it down on the dollar index, but if it reverses, replot the targets in reverse. Okay. So what did the dollar do last night? Did it go down? No, the dollar went up. See that right there. Now, some currencies will know that it's still going down and will continue what it was originally doing, and some will follow the dollar. All right. So the GJ right over here. All right. So the GJ, when the dollar flipped, it flipped to the upside. So there you go. Anybody trade GJ up? All right. So back to the alerts, and I'll put it right here. So here's the GJ. So I had it as a buy, all right? So it was at a buy, and because the chart said it was a buy, you can see the structure. All right, the entry was at 182.70, 182.70, right there, right there. And the target is 184.10. 184.10, which is right there. 184.10. Anybody trade GJ up? 103 plus 3 more still in. Nice job, Jamie. Way to go. There you go. Anybody else? Good job, Jamie. Anybody else? Just Jamie got it. Okay, can't count that. Nice going though, Jamie. Way to work at it. All right. Back to the alerts. The next one that I sent out was the pound dollar. Okay. Oh, there's Rob. Oh, Rob, 78, 62, 45, and 21. Nice job. Anybody else? We got 2 traders. Anybody else trade GJ up? Robin K usually does it. Okay, well, that's too bad because we could have. Those are big, great trades, guys. Nice work, everybody. All right, when we had the dollar index, pound dollar, excuse me, entry price was at. Let me get pound dollar up here. So the entry price was 2302, right there, right there. The target limit price is 2382, right there. All right, so there he is. Anybody trade pound dollar up? Pound dollar. Nobody did pound dollar. Okay. Next one was the pound Aussie. Go. All right, pound dollar, we go up to 60. All right. And this is pound Aussie, and we had a entry price of 90.86, 90.86. Where are you? 98, way down here, 90.86, right in there. For that whole move, the target is 89.58, 89.58. Where's 89.58? Oh, that's screwed up. Oh, it was a sell. Oh, that's why. All right, so this one reversed. All right, that's why. All right, so we put the new one on this morning, but there it is. Anybody? So yesterday we were looking for it to continue on down, all right? Because the dollar went up, so it should have gone down. But they went ahead and said, "Nah, we're already structured. We're going up." 23 and 4 still in, Peter. Okay. Anybody else? Nobody else? Oh, that was GU. Oh, GU. Okay. All right. Thank you. All right. And the last one for me was the pound New Zealand. And pull it up here. And pound New Zealand to the pip to its there. Now, pound New Zealand was originally a sell last night. When the dollar flipped, it became a buy. You replot the targets and where did it go? Right to it. Anybody trade pound New Zealand up? Once the dollar reversed, you reverse. Anybody? Okay. All right. If you traded something else, you'd like to see it. We don't count it. We'd like to see it. Thanks, Larry, as always. And wish we'd put you to work on that GJ, Larry, but unfortunately, we don't have 3 traders. So you can see traders made money last night. We do not count it. We do not count it. AJ, break even. Melinda, nice job. Way to go. Way to be. See, you majored in risk. That's what you got to understand. Okay. I majored in risk. I didn't like what was happening. I took it out for 0. Fantastic. 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 All right. And as a trader, you have to always be willing to do that kind of stuff. All right. because you're in a risky business. You've decided to go into a business that risks your money. Therefore, risk is paramount. All right. So nice job, Melinda. Good work. Anybody else? Nobody? All right. So looks like I'm going to play a song for Jamie and for Rob. All right, here you go, boys. All right.
That ain't working, that's the way you do it. Money for nothing and your chicks for free. Money for nothing.
Money for nothing and the pips for free. There you go. All right. So back to where we are. All right. So we got Aussie dollar. All right. Got to have a pullback. Not well, I mean, we have to have a break and a pullback, break and then a pullback and go. Not happening. All right. That's the only one over there. Over we got EA over here. AA. We're getting a pullback. Okay, this is great. All right. So what they did is they broke through the barrier that set the agenda. Now they go find buyers. Does everybody understand that? All right. The big boy pushes it through and says, okay, we got it through now. All right, now let's go find some buyers so we can get to our objective. So it's coming back down here. All right. When it comes back down here to previous support, previous resistance, now support right there. Look for the bounce right there. All right. Still trying to figure out this drawer. It's a whole totally different. And I'm trying to get used to it. There we go. So it's coming down. If it comes down here, you see it do a close and reverse. What is the close and reverse? That's a close and reverse right there. Right? That's a close and reverse right there. 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 There are 3 close and reverses up there. There's a close and reverse. You think they do close and reverses? Absolutely they do. So to get white back up here. There we go. Got it. Okay. So wait for it. See it bounce? That's the opportunity. Now, if you're going to take that trade, if you're going to do it, all right, so there's the opportunity right there now, right? If you're going to do that, you have to put your second trade in first. Where's that? Right above that top right there. That's where it goes, right there. So you're going to put it right in there, right there for trade 2, 2 lots, all right? It comes down here, it bounces. Trade 1 is then down here. Right there. All right. Now that's what we wanted to do. Come on, baby. Come on down. All right. Now let's take a look and see where the stop would be, all that sort of stuff. Right. All right. So on a 10-minute chart, a retail trader's stop or technical stop is 5 to 7 pips below the last support or resistance, whichever way you're going. So that's the last support. So your actual stop would be 5 to 7 pips below that, right? So that's the technical stop. So what does that do? That gives you the risk for reward. All right. So here's your risk. Your actual risk would be right here. And this is your actual reward. So you see it's 1 to 3. So it's doing pretty good. I'm risking 1 to make 3. It's all right. All right. So, but where does the stop go? It goes 3 times up below that. So let me pull this up. All right. So if the stop is the original stop is right here, 5 to 7 pips, then you go down 3 times that. Right there. Right in here. So that's where the stop would go. 64.77. Right? You say, well, man, that's risking a lot of money. No, you only have 1/3 of your lots. Remember that. So the way you have to do this is you multiply your account, whatever that is, times 2%. All right. So let's just say that equals $100 to make it easy to figure. Right. So I can risk $100 at any time today. All right. So I take my first trade here, which is 1/3 of my lots. All right. And that's a what? About a 32 pip stop right there. All right. So 32 times 3 is what? 32 times 3 is 60, 96, right? 96 pips. So that's $96. So I'm okay. See that? All right, now, but when trade 2 goes in up here, I now have 2/3 of my lots up here. All right. So I have to cover the risk of that with $100. Plus, I've got to cover the risk on trade 1. And that's why you bring it to break even. Now, trade 1, you can't lose on. And now you have 100 pips divided by 2/3, by 2/3 of your lots, which means you can put a 50 pip stop on this trade for the target, and you still don't break your rules. Okay, I'll answer that, Ralph. So let me find one that did it. All right. All right. So here's one right here. I like to do. So here's the opportunity that they did. Right? They did this opportunity right here. All right. So you can see that trade 1 is on the break of the flag pattern right here. So this is trade 1. Come on. I don't like this drawer. Some parts I like. So that's trade 1. All right. Trade 2 is then here, and trade 3 is up here. All right. So how do I trade that? All right. So it's going to depend on the size of your account, Ralph. All right. So in trade 1, it's 1/3 of my lots. In trade 2, it's 2/3 of my lots. Now, when trade 3 comes in up here for this move right here, all right, I now have a choice. I can trade as many as 3/3 if I want to put all of this at risk, which equals 2% of my account. If I want to put all of that at risk up here, I can if I'm convinced in the trade. Why? Because I'm not risking my money. I'm risking the profit that I've made over here. And so you could trade 3/3 of your lots here. All right. Now, it keeps going like that, Ralph. You can go 3/3 again and 3/3 again. Why? Because everything's, see, the thing is, once you're riskless, you're riskless. All right. Once you have no risk, all right. And trade 1 and 2 and then 3 go into profit. Now I have absolutely no risk on trade 4. Why? Because all these 3, I now have 4% of my account, all made me money, and I can risk whatever I feel like up here. Maybe I want to bank all but a couple of pips and trade another 2/3 here. You know, it's all about, and it's the size of your account determines that route. All right. So remember, you're going to have to put money up as collateral for every trade. All right. So you're trading a standard account, it's $100. All right. So if you got 3/3 of your lots up there, you got $300 at risk. See? So that not $300, you have $300 of margin used. I mean, not $300 of risk, but $300 of margin used. All right. So if you have a $500 account, you can't do it because you've got 2/3 of your account already at risk. All right. But if you got a $5,000 account, you can easily do it. See? So, and that's when you make big money, especially when the currency rock and rolls like this one did to the downside. All right. You can figure out how to do it all the way down. And how did they make it happen? This is how they made it happen. They did a descending wedge. Right there. Then they did another descending wedge right there. Right there. Then they did a flag pattern right here. And it finished it off right here from up here. So what did they do? 2 descending wedges and 1 pullback. I mean, 1 flag. All right. How easy was it to trade? Pretty easy. Pretty easy. All right. And you can see that ultimately, here's what they did. They actually traded trade 1. This just got help keep it going, but they traded 1 like this. All right. This is how you came into that descending wedge. When you come out, you're going to do the same. Notice that right there? See how they did that? All right. Same amount of movement. All right. Everything is balanced in the forex. Everything is balanced. All right. $500. You trade, you put $500 in an account, Mosen, and you trade only the $500 with micros until you get your statistical probability to 65%, and your average pip capture is at 35. All right. Now, in the course of that, you'll probably double or triple your margin account. Once you get to 65%, you at least double at that point. Now you got $1,000 in there, right? And 500 you earned, right? Now, if you can continue that on, all right, you can go, okay, I'm gonna fund my account. I'm gonna put $5,000 in there. Now, you don't trade any way different than you were trading when you were trading one micro. But now you can trade with $5,000. You can trade 3 minis, all right? 3 minis can make you a living for the rest of your life, you know? 3 minis a day, 3 minis a day times 50 pips, 50 pips a day. What can I do? It's 3 minis is $150 a day. All right. So what's in the course of 200 days, $150 every day. Right. And then you work your way up. And you know, then once you get up into big money, $25,000 or more, you sweep the account. All right. What does that mean? I start my account at $25,000. All right. All right. So what do? I now have made this amount of money here over and above that $25,000. I made $20,000 this month. Okay. So you take the 20,000 and you sweep it, put it in your account, not your bank account, not your broker account. You put it in your bank account, leave the 25,000 and start every month over with 25,000, pulling $20,000 a month out. Not too shabby. Right. And that's the way you trade from then on. It's pretty easy at that point. Right? All right, Aussie dollar, you're going to do anything for us? Nothing. Right? Euro Aussie, you're going to do anything for us? Yeah, it bounced, but it didn't go low enough. Yeah, it already bounced. You don't have 55 pips left. You can't trade it. It had to come down to there. Didn't quite get there. So that's, you had to get 55 pips. Go find, make sure we know where that is. Right there, see? If it had come down here, you could have taken that trade. Yeah, of course. It's got 2 options, right, Daniel? Could be a break hook and go or a break and hook and no go. Who knows? But we're in a hook now, remember. That stalls everything out until we get to go again. Now, once we get to go, why are they going up? Remember, you got to learn the why. Why are they going up? To find the buyer, the sellers. That's a capital. It depends. It's not that most. It's about your skill level. If you can trade at 65, 70% for the rest of your life, there's whatever you can put in there. I don't think you should put more than 25,000 in there and just take all your profits and trade your profits all week, all month. Right? I'm up 20 grand. I'm trading the 20 grand, not the 25. And then at the end of the month, I sweep it. Now, one thing to remember is that becomes a taxable event, right? If you leave the money in the account, then you didn't take the profits. Therefore, it's not a taxable event. If you take the $20,000 out, using that as an example, then you just made $20,000 that you owe taxes on. All right. Now, if you're in the UK and you're spread betting, you don't owe taxes on it at all. All right. Because you're spread betting and you can make up to $1 million tax free, which is why there are so many retail traders in London. All right. Because they can trade tax free in a heavily taxed country. All right. You know, what's their tax rate? 48%, 49%, something like that. Yeah, but we get free Medicare. Yeah, but you're broke. That's why you got to have free medical. So then it's all about your broker. See, now it's not about anything else. It's how stable is your broker. Because if you've got $200,000 in there and your broker goes bankrupt, he's got your money. You don't get it. You'll be lucky to get a penny on a dollar. Yeah. If you're gonna declare wins, you can declare losses. Exactly correct, Rob. It's a cost of doing business, right? You need to set yourself up as a trading entity, though. You know, Nicasio Trading Inc. All right. Now Your charts become an expense. Anything you expense all becomes an expense against your business. That's a business now. All right. My profits are good. My losses are, I count as losses. And now I run it just like a business. No different. Right. But you got to be set up as an entity. Right. Other than that, you're a hobbyist. Right. You're just a hobbyist until you set yourself up as a business. Well, once you set yourself up a business, now you got regulations you got to deal with, all that kind of stuff. You got to have accountants and all that, a lot of stuff that you have to consider. Do I want to do this as a hobby or do I want to do it as a business? Well, we want to do it as a business, but for some people, it's better to declare that they're a hobby, right? And especially in the beginning, when you're growing your account, all right? And in that case, what you want to do is you want to grow your account as opposed to fund your account. So you want to get yourself to the point where you can trade at a high enough level that you're consistent and sustainable, right? Now you can make a decision, right? But you could stay as a hobbyist forever, right? And not take your money out. And as long as you're not taking your money out of your account and growing your account, making it a bigger account, a bigger account, then you can do that as long as it takes to get the level you want it to be, right? But at some point in time, it's to your benefit when you're a good trader to set up account and be totally a business, right? And that would be, I'm not a tax accountant guy, so I'm not giving you advice. That's not it. That's just, well, I'm just talking out loud. I'm not giving any investment advice. Please don't misconstrue that. All right, dollar, maybe it's a break hook and go. Maybe it's reversing. We don't know. Yeah, we have one. We always have one, Joe. It's right here. Here's gold right here. Yeah, the time to buy was down here when it was 1811. Now it's at 1869, $70 more an ounce. See, the time was to buy right there. All right, so we'll get rid of this. We had that down last week. All right, so we're just range trading right now. And we look at the fibs. Do they know the fibs? Yep. Do they know the fibs? Yep. Do they know the fibs? We'll leave them. Normally, what I would do is I would redo the fibs if they weren't proven to me that they were that. And I would do this move right in here, right there. That's what I would fib. But because they're proven to me without a shadow of a doubt that they're doing, that they know where these numbers are right now, then they know where it is. 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 See that? They know where that is. They know where that is. Right? See that? So I'll leave these alone because of that. So we can't get we have no significant pullback here, so we can't get a 1,000 fib on it. Right? We need a ABC or a 1, 2, 3. We need 3 points. We only have 2 here. So we can still do it. We go from the swing low to the swing high right there where it went sideways. And there's the 270, the 618, and a 1270 right there. All right. Got a channel working to the upside. Pretty tight. Yep. Heart line's proven. Yeah. Absolutely, Steve. Yeah. Well, let's go look at Bitcoin. As long as we have a feed for it, you can trade it. This is Bitcoin, basically going sideways. Okay? So you still get momentum coming in, and we see because we measure momentum, we don't measure volume, we measure momentum. It doesn't matter what chart it's on. So it doesn't matter whether it's pig bellies, soybeans, pound dollar, or gold. The same stuff works, right? And bankers always do, and people do. The reason they do Fibonacci's is because it's human nature. Right? Nobody knew about Fibonacci's in trading until a Japanese rice farmer figured it out. And he took his rice down to the market one day and he went, wait a second, I'd see these prices. And he figured out the Fibonacci sequence. So he held it. And every day he'd go in there and he'd write a little number down on his rice. And then one day he walked in there and said, I want to sell it all. And he sold exactly at the high. And they said, how did you know to do that? How did you know to do that? And he eventually revealed to him after he made a lot of money that he was just using the Fibonacci sequence. So let's put a fib on here from the swing low to the swing high right there. And you can see, are they doing the fibs? Do they know the numbers? Do they know the number? Do they know the number? Do they know the number? See that? All right, now we got a downtrend here on crypto, on Bitcoin. We got a down channel working right in here. All right, there we go. All right, heart line proven, heart line proven, heart line proven, heart line proven. If you can't prove the heart line, you don't know if the channel's right. Well, I'm on MT4. I don't have a heart line. That's correct. Ask yourself, why don't I have a heart line on a channel at my broker? Well, obviously he doesn't want you to have it. Otherwise, he'd give it to you. All right. Now, how about fib extensions? Okay, so you got a swing high here, to a swing low right there, back to a swing high right there. All right. Do they know the number? Do they know the number? Do they know the number? See that? What are they doing? There it is. You see, Steve? It's price action. Price action works in anything. If you can learn to trade price action, you can trade anything. Right? They'll make it illegal, Peter, or they'll tax it to the point of where you can't. You can't trade it anymore. They don't like it. They do not like Bitcoin, but they're glad that Bitcoin and crypto and Ethereum and all them set up the market for them. They created a market. So now instead of the government saying we need to go to a digital currency, it's already accepted. So they don't have to try to force it on you, right? Yeah, CBDC. So now there would be nothing wrong with a digital currency from the government on one condition, that they don't outlaw cash, right? If they outlaw cash, they got your slave, because now the only way you can conduct transactions is through your app or whatever it happens to be that they use, digital currency. Now, that means that they control you. Anytime they want to go, yeah, Peter, you weigh 350 pounds. We saw you yesterday at the donut shop buying a donut. All right. So from now on, any donut stuff that gets comes to your account, we're blocking it. They will have that ability to do that. That's why you don't want to. So that's why you want cash. Well, I'm going to I'll take $1.50 and go buy me a donut. All right. Yeah, everything tracked and everything taxed. Exactly right. So they have an agenda. Be aware, they have an agenda. Well, I don't know about precious metals. I don't know. I couldn't answer that. I do know in forex, Joe, that they only fill gaps 78% of the time. I'll prove that to you here. Hold on. Here we go. Got it. So this was a study done by, I forget who it was, Humble Trader, I think it was, but I'm not sure. All right. All right. So, here's all the information, bullish gaps, bearish gaps filled, blah, 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 blah. You come down here, this is where the real number is. Let me blow it up a little bit. Maybe you can see it. All right. So, can't quite get to the bottom here. Hold on. There we go. All right. So bullish gaps filled on day one, 73%. All right. And bearish gaps only 69 for an average of 71. By day two, it goes to 78% on bullish gaps, 75 on bearish, which is an average of 72%. All right. Then by day three, it goes to 80% on bullish and 75 for an average of 78. So by day three, 3 days after a gap shows up, right, only 78% of them are still filled in the forex. Right. So in the stock market, they care a lot about that. Right. We got a gap. It's going to get filled. All gaps get filled in the stock market. That's what they say, right? But that's not the case in the forex, right? In the forex, only 78% of the time. So there you go. So there's Bitcoin, right? Want to look at the S&P 500? We can do the same thing here, Stephen. All right? Do they do the same thing? Absolutely, they do. All right. So the S&P 500 will go to a 240 right here. You can see they're in a big range right here. Right, and we're going to fib from the swing low to the swing high, and we stop Do they know the numbers? Do they know the number? Do they know the number? Do they know the number? Do they know the numbers? Do they know the numbers? See that? It's all going to come down. It's all propped up, Steven. It's all propped up. Dollar's propped up. That's why it's good buy on gold and silver right now, because the dollar is propped up. But the dollar sooner or later will do a free fall, sooner or later. And we'll want to be in position to make sure we take advantage of that. Eventually it's going to come down. What goes up has to come down. What goes down has to go up. All right, you can see the channel here. We're on S&P. All right. Heart line right there. Might be a little bigger. It is a little bigger. All right, see what told me. I didn't see very much in here at all. But if I move this up here, this one, to the pip, see that? All right, now I know that's a good channel, right? All right, can we find the fib sequence? I mean, Fibonacci, let's go from the swing low to the swing high, back to the swing low here. There we go. There's the targets up. There you go. Now, you can put an ATR on here if you want to, but we don't have it, so I don't have one. But you could put an ATR on your MetaTrader or whatever you got, TradingView, and then you'd have the ATR for the S&P. Does that looks just like a forex chart, doesn't it? It's the S&P 500. Looks just like a forex. Oh wow, what else can I see here? Well, I can see when the bears took over. I can see where the bears continued to move. Coming down, I see where the bears took over and continued to move. Bears took over to the bottom. It's all right there. Doesn't matter what you're trading. Right, and we have lots of exchanges. All right, not just forex. We got cryptos, we got metals, we got all that sort of stuff. Right. So, and one of the things, Joe, you might want to have your father do is buy significant amount of silver. And the reason for that is, first of all, right now it's about $20 an ounce. All right, so we can find out what that is. Actually, let's go change this to XAG USD. All right, so it's at $22 an ounce right now. All right. I was telling everybody, for years now, every time you get a dip, go buy it. All right. So, we bought way down in here when it was $14 an ounce. And you want to buy physical silver. I can't even get to it. Right. So long ago. Yeah. All right, let me finish this, and I will, Steve. All right, so it's gone up from $20. It's gone up $2 right in this move right here, $2. Right now, if the dollar free falls, the XAG silver and gold will go the other way. Will go up in value, right? So this could go up $50 an ounce, $100 an ounce, something like that. Well, if that goes up to $100 an ounce, it's a 4 times exponential, right? And what ends up happening? Well, you could still go to the grocery store with an ounce of gold, an ounce of silver, and buy groceries, right? If it came to that. You can't take a bar of gold in there and have them be able to give you change. See, so kind of don't only buy gold and silver. And silver would be what you would use for everyday stuff if the spit hits the fan, kind of thing. Let's go look at oil. It's already here. Right there. Oil's having a dip. It's down to $83 a barrel right now. You can see long term it's coming down. Got a zero line break to the downside. You can't use T30s on here because the oil is too wacky. Got a channel. All right, heart line proved. All right, got a gap right there. Might fill that. All right, are they doing the fibs? Well, when they were doing them to the downside, right up to the see how they know the 382, right? 382 is when they get reward for risk to the downside. Always remember that. You can't trade it to 214 to the downside or to the upside. You got to go to the 382. Right? They know that. They went to the 382, turned on a dime. Right? Well, this is oil. It looks just like a forex chart. Yeah, it sure does. That's because they all do the same thing. It's herd mentality, herd mentality. All right. Do flags work at the top? Do flags work at the top? No, they don't. All right. So you know that from your forex days and you're trading oil now. So they don't work at the top. Right. We find a target coming down. Let's just go over here. Here's the first target using the fibs. Swing high, swing low, swing high. All right. Right to the 1000, right to the 1270, right to the 1618, to the 2.618. See that? They knew exactly where it was. Right. And as you go more and more in depth into the trend, the bigger the space is. Right here. How did they make sure they got this space? They did a flag. See that? There's the flag. Make sure they finish the space off. See that? Why was that a flag at the top? Well, what were we looking at? Oh, right here. Well, you can see it's a flag, Ralph. See that? And here's the top of the channel. There's the top of the channel. There's the flag. Well, you got to prove your channel then. That way you know where you are. The market has to prove to you that it knows it. See, right here's the heart line. Right there. They stopped dead on it. Why did they do that? To prove to everybody this is the correct channel. Remember, they got to send the information out. Bankers can't call up other bankers and say, "Hey, we got a channel build over here on XAU, oh, that's XAU. Wait a minute. Oh no, it is light sweet. Right? Yeah, no, never mind. It's light sweet. It's oil, right? And we'd like to take this down to the 4.236 at $77. They can't call each other up. Why? Because if they call each other up, it's price fixing and you go to jail for that. So how do they communicate the message? They do it in the charts. And that's why everything works in the charts if you learn price action. If you don't learn price action, you're stuck with something to tell you should trade. That becomes an indicator. Once you get used to an indicator, you're now an indicator junkie and it knows nothing about trading. Nothing about trading, and you get whacked. Yeah, but I can't learn price action in 3 weeks. That's correct. You can learn to use your slow stochastic in 3 weeks, but you can't learn price action. But unless you learn price action, you're going to fail. So what's the process? Commit to the process and learn how to do it. How do I do that? I do what they do every day. What is it that they do every day? Pullbacks. You know that because you're getting caught in them all the time. And flags. All right. So you got to know what flags do. You got to become an expert at flags, and you got to become an expert at pullbacks. All right. Now, if you can do those two things, which they do every single day, and trade at 65%, you're now sustainable. Your losses will never overcome your wins. It's not hard. Right? Thought laws have been determined objective by this government. Doesn't matter. It's all about what does the Constitution say. And the only people who can make CBDC can do all it wants to, but it has nothing to do with the law. It has nothing to do with the law. Now, if we capitulate in the United States and say, yeah, we want that, and they take it to a vote and it votes, then it will become law. And that's why votes are so important. All right. Yeah, your vote counts. Huge. All right. Let's just take this move to the downside. What did they do? All right. What did they do? They did a pullback. They did a flag. There's a pullback right there. Here's the flag right there. Then they did a pullback right here. You can see the ABC inside it. All right. A, B, C to a close and reverse. That set this move up. Then what do? They did a sideways move, another flag pattern. Come on. Another flag pattern there and finish off the move all the way down. They don't do rocket science. All right. So if I could learn to do pullbacks, I can make money. If I can learn to do flags, I can make money. Do they do them every day? You can take any chart and you can go anywhere you want in a chart and see if they don't do that. All right. So here we go. Down, pullback 1 right there. All right. Pullback 2 right there. Then we got a flag pattern right here. All right. Flag pattern. All right. How do we come into that flag? We came into the flag coming down like this. All right. How do we come out of that? There it is. See, don't matter what you know. They do the same thing. It's human nature. It's human nature. All right. So you tap into human nature. Bankers are tapped into it. That's why they create an agenda. They create an agenda that will entice traders to trade. Why? Because of option contracts. So when they're sitting up here, up in this level area right here, and they decide they want to buy an option contract down here, right? So they want to drive it to that option contract. Why would they want to do that? Because it's billions of dollars, right? Or at least millions, right? So they use the spot market to drive it to the option contract. The option contract is the smallest part of the forex, but it has the biggest payoffs, right? On your IC, you have a link. Pull it up here to the option contracts. Now they are plain vanilla; they're not barrier, right? So go down here. Here's options. You click there. It'll take you to the website. You click on Forex options for today. There they are. And you pull this little Google sheet up here, and here they are. Now you can see here's 336 million pounds, 600 million pounds, 1.3 billion Canadian dollars, $567 million. Okay, see, and these levels are most likely where they are for the barrier options. Barrier options, there are millions of those out here, but these are not, and they keep track of where these are, so they know where the levels are, right? And you'll see there's lots of even numbers, 10400, and then the 50 numbers, 00, 50. There's a 75. See the 5 right there? That's why we don't use a 5 in our stop. Never use a 5 in a stop. Why? Because option contracts use them. If you're sitting on at 105.75 and an option contract hits, they're going to take you out. If you were at 77, you make it through it. It's just that simple, right? That is interesting, Larry. Yeah. So, what happens to forex traders is that they don't understand their job. Their job is to be an information gatherer. Well, in the beginning, you don't even know what information you should be gathering. So you have to start the process of doing that. And once you know that you can trade what it does every single day, then you can make money on one condition, that you'll spend 100 hours doing it. All right. You can be world class in 100 hours at pulls and pullbacks. And that's all you need. Right. That'll get you. That means you can earn while you learn all the rest of the stuff. Come on up here. What are you doing? Why are you taking your time? I don't know why it's not coming up. Oh, there we go. Finally. All right. The 100-hour rule. All right. So you should read this article. All right. And then take it to heart and commit the 100 hours. What do I commit that time to? I don't commit it making good charts. I committed doing two things. First, polls, flag patterns, and I do 100 hours of them. Right? Then I do pullbacks, 100 hours of them. 100 hours is 2.5 weeks. All right. So 2.5 weeks, in a month and a half to 2 months, you could be world class if you'll do it right. Well, you won't do it right because you got human nature. Human nature says, where's the shortcut? There is no shortcut. All right. There is none. Get it out of your head. So as you can see, the market has slowed down because of FOMC, and that's what we thought, all right? So the 3 opportunities we had this morning, did we get a chance? Never broke up. Couldn't trade the Aussie dollar. Man, I was over at ProAct Traders for an hour and a half today, and they never made a trade. I'm over in this group over here, and we make 20 trades every single day. How's that working for you? Well, it's not too good. No, because you're scalping. And you got to be 90% correct for the rest of your life. If you're going to scalp, you got to be 90% correct. In other words, you got to be the greatest trader on the planet. Ask yourself, am I the greatest trader on the planet? If the answer is no, you got to quit it. You can't do it. All right. So we never got that opportunity. We were going to trade the Euro Aussie and we missed the pullback. All right. So there it was. That first pullback was one you had to take because that gave you 55 pips. If you missed that, you never got a trade. It's still working, and those who are in it are really happy. All right. Can everybody see the flag pattern? All right. There was a flag. All right. There's the break, hook, and go right there. See that? That's it. It was a flag. It was a pole. All right. Now, if it's a flag, how am I coming out of here? I'm going to come out of here the same way I came in. All right, so here's the flag again, right there. How did I come into this flag? I came in like this. All right, so how am I coming out? I'm coming out like that. Not rocket science. This is very simple. Here's the problem, and here it is right here. This right there becomes a problem. Time. It takes a lot of time. It can do anything it wants, but we don't have 55 pips. That's why you got to have the rule of 55 pips most of it. It can pull back. If it pulls back to 55 pips, yeah, then we would have an opportunity if it pulls back. But that's 55 pips. All right. You had already had one shot at that. The break, hook, and go with the flag. There it was. There was your opportunity right there. You had to take it right there. Otherwise, you don't have 55 pips. And that's why we didn't get it, because we missed it. All right. I mean, we were heads up on it, but nobody took it. Let's put it that way. All right. So there we go. That was the Euro Aussie. The only other thing we could have traded this morning was the New Zealand yen. Did we get any move? We're just now getting it right now. We've now broken above the range. All right. Still got a top in play here. All right. So you see that. All right. So what you want to do is you want to take the top out. All right. Take the top out like that, pull back down, and then go. Trade 1 is here. Trade 2 is here. It's got a New Zealand in it. The next session is the Sydney. We're interested in that trade. The only trade we're interested in right now is the New Zealand yen. The only one out of 20 currencies. And if you're a new retail trader, you're going, wow, this seems like a lot. Well, it's because you have to gather the information. And in the beginning, it's a lot because you don't know what information you got to gather. And that's why you use a checklist. A checklist is great in the beginning, but ultimately it has to be internalized. And you can't use a checklist because a checklist is not going to add up very rarely where everything says buy it or everything says sell it. Right? There's always something that says maybe not, maybe not. Right? I once had a trader who had a 32-page checklist. In order for her to make a trade, she had to check the boxes on a 32-page checklist. By the time she got them all checked, the trade was over. So what do we want to do? We want to gather the correct information. We don't need all the information. We just need the information that's pertinent to the chart today. That would be fibs. That would be any channels, proven heart line. That would be any targets, which might be the 1000 fib, or it may be the ATR, or both. We need the other fibs here, which distinguishes where we can press our winners. See, the 618 in this instance right here shows you that trade 1 is here and trade 2 is up here. See, it shows you that. Right? What does it? This fib. If you don't have that fib on, you don't have it. You don't have the right information. That's critical for today on this chart. Might not be tomorrow, but today it is. See? Gather the right information. All right? What is the direction? 2 things tell you that. MACD and the channel, if you can prove the channel. Oh, I'm on MT4, I can't prove the channel. Then you're guessing. You're guessing. You have no clue. You're not using that data, you're just guessing. All right? They tell you direction. Okay, now I'm looking for a buy. Now what I got to have? Well, where's the fib? What barriers are there en route to the target? Where is the ATR? Because it gets hit all the time. Where's the 1000? It gets hit all the time. Why does the 1000 get hit? It gets hit because it's 100% of that move right there. When they make the turn, they're going to do 100% of that move. And all you got to do is go spend a half a day in the past just drawing these lines like I am here, and you're going to go, wow, you know what they do? If they go down and they pull back, they're going down the same amount of distance. Really? Yeah, they are. I've checked it already. All right. So do it here. Down, right? Pull back, down. There it is. Actually a little lower right there. All right. Now pull back here. Whatever that is right there is what they're going to do here. Did they do that? Yeah. See, that equals that. See, not rocket science. All right. What is that? It's a pullback. Can I trade pullbacks? Yeah, absolutely. How do I do that? I pop a fib from the swing high to the swing low of that move. And as long as I'm at the 382 or higher, I can make the trade. Well, where did they turn? The 382, they didn't find any sellers, didn't find enough sellers. So what do? They popped up to the 50% fib, and that's where you see the exhaustion wick. That's where the sellers came in, and that's where they drove it all the way down. Where did they go? To the pip to the target, to the pip to the target, to the pip to the target. To the pip to the target, to the pip to the target, to the pip to the target. It's all known. All right. Now, if I would spend 100 hours doing that, what I just did, that's all you had to do. If I spent 100 hours doing it, I would be a world-class pullback trader. And since the market pulls back, pulls back, pulls back, pulls back, I have lots of opportunity. I can earn while I learn. If I'll commit to 100 hours to become world-class at it. It's not hard. It's you. You're it. I'm not it. I'm the one that tells you what you should do, but I can't make you do it. Anything can pull back, and in fact, it should pull back. Anything should pull back. All right. Now, because you have a rule, you know that's an unsustainable trend. That's an unsustainable move. I cannot buy this currency here. Why? Because I'm buying at the top. All right. Therefore, it has to pull back. If it doesn't, I can't make a trade. See, it's just that simple. It's a T3. It's a T3, Stephen, with a very special setting. And we fine-tuned this so much that when we get, here's the key, when we get a zero line break of the MACD, a zero line break of the MACD right there, and a T3 break right there simultaneously, it's 82% going to go in that direction. All right. Now, if you're on MT4, it's only 66. Not bad. 66 isn't bad. Remember, you got to trade at 65. So you got something that's 1% better than you can have to trade at. All right. But on our charts, it's 82%. All right. Did it go in that direction? Yeah, it did. Here we go. Right there. We're almost to target right now. Coming down here. Here's a zero line break right there. T3 zero line break, T3 break right there. What did it do? Did it go down 82% of the time? Absolutely, it went down. See, over here, you had one up. And then you had one up. Did it go up? Yeah. You had one to the downside. Did it go down? Yeah, but it didn't go anywhere. All right. So that doesn't mean it's going to go to target. It just means that's the direction it's trying to go at that time. That's what a trader has to learn. When this was the one you take and when it's not. So what tells you which one to take over here? You see all these, you're getting MACD crosses, 1, 2, 3, 4, 5 of them right in here. What does that tell you? Don't pay any attention to them. Why? Because we're in a flag. Big sideways move. You're going to get them up, you're going to get them down, you're going to get them up, get them down. But on the breakout over here, right here, on this breakout over here, now it's 82% going to go in that direction on a break of the flag with making lower highs, 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 lower highs. See that? What's the chart telling you? It's telling you what to do. Did it go in that direction? Did it go 82% in that direction? I think so. See? And it continued on. How did they get it to do that? Well, they did a flag. Oh, that's why I got to learn flags. That's right. There's the flag. See? What do they do? Pull back, pull back, pull back, pull back, pull back, flag, go. Where'd it go? 186 to 1. 500 pips. How about that? 500 pips. Could I trade that? If I was world class at pullbacks, if I was world class at pulls, could I have made money there? Yeah. Can you see the ABC here? There's A, B, C to a close and reverse. Let's go. A, B, C to a close and reverse, close and reverse. Let's go. See that? What do they do here? A, B, C, close and reverse. Let's go. See, it's not rocket science, but I have to know how to trade that. How do I trade it? The key is the fib. As long as I'm above the 382, I have risk for reward. If I don't have that, I don't trade it. Right? I'll prove it to you. This is why you got to have rules. This is why you got to know what you're doing. If you take an entry at any of these fib retracement levels, and your next target is the 270, which is the next target. It's all could go to 618 to 1270, but the 270 is the next target. Right here, you're risking one lot to make 0.62. It's not a 1-to-1 risk to reward ratio. You can't trade the 214. But at the 382, you're risking one lot to make 1.06. That's a better than 1-to-1 risk to reward ratio. That's why you got a rule. If it pulls back and goes to the 214, what do I do with the 214?
You can't touch this. You can't touch this.
I can't touch this. It's just that simple. How do I learn that? Go do 300 of them. Do 300 of them. Then your brain can see it. Right? The problem with traders is they don't realize left brain and right brain. Right brain has emotion. I'm gonna kick it out. Oh man, I'm a winner. I got 5 pips. Yeah, awesome. That's emotion. You're on the right brain. I think it's going up, man. I think it's going down. That's belief. Belief causes people to get in planes and fly them into buildings. All right. So you don't want to be on the right side. The left brain is the trader. The left brain has logic in it, analysis, math, science, knowledge, facts, detail. But the left brain, who is the trader, needs 300 images of everything you're doing in order to be able to do the statistical probability. Trading is statistics in action. It's not about whether something's going to do something 100% of the time, because it's not. It's about how do I get myself on the right side of the order flow, which has the higher statistical probability of completing. It's only that. Statistical probability. My left brain has to know what the statistical probability of a poll is. How does it get them? You do 300 of them. Right? My left brain has to know the statistical probability of a pullback above the 382. All right? I got to do 300 of them. And then since they use closing reverses, I got to do 300 closing reverses. Right? Well, probably more than that. Abdul will tell you it's 1,000. He had to do 1,000 of them to get it. But now he doesn't miss a closing reverse. Why? Why do you want to trade a closing reverse? Well, a closing reverse, if you get it right, all right, is the lowest risk for the highest reward. That's your stop. That's your stop up there. 5 to 7 pips above the closing reverse. And there's your opportunity. Right? There's your stop. 5 to 7 pips above that. Right there. So there's come on. I don't like this neutral. There's my risk. Yeah, there's my risk. There's the reward. See? 5 to 7 pips is all you need on the closing reverse. If you got the right, if you have the direction right. You say, well, yeah, but you get closing reverses both ways. That's why you got to know what the market does. All right. Why did we get a closing reverse right here? There was a reason for it. The closing reverse was to set up the ABC to set up the next closing reverse to the downside because the channel is down. See, the chart tells you what it's doing. Bright candles like this are huge, right? So, Steve, the way that works is to turn it bright red, to put an arrow on here, just put an arrow on here means that there's a slug of money came in, not any big deal, all right? Now, this is a non-contested area right here. And so it takes little money to make that big move right there. It takes little money to make that big move, all right? Now, when you get over here, right here, once you break this bottom right here, that's where the follow through came through. That's the 1,000 bankers in the interbank market. Right? They came through. Now, in order for it to turn bright red, it has to have more money coming into it faster than the previous 6 candles. Doesn't matter what chart you're on. So when you're down on a 10-minute chart, if you see it turn bright red, more money's coming into that candle than in the previous 6 candles. What is that? An hour. So more money's coming into this candle in this direction than they have in a whole hour. What kind of information is that for you? You see the information it's telling you? The big boys are here because the only people who can print candles are big boys. Nobody else can print a candle but bankers. They're the only ones. And they're in concert. If it's bright red, there's a lot of bankers here. Millions and probably billions. It's actually billions of dollars. Now, the white dot, however, is a totally different thing. All right. The little white dot you see here, the white dot you see here, the white dot you see here. All right. That's a big boy coming in. And when you see them on a 10-minute chart, they're designed to be seen on a 10-minute chart. All right. It's that same exponential of 6. All right. So when the money came in here, right, where the white dot came in here, I'm on a 10-minute chart. That means more money came in on a 60-minute chart than in the previous 6 candles. Now, on a 60-minute chart, that's 360 minutes or 6 hours. All right. So think about that. So in the last 6 hours, more money came in on this candle right here than any candle in the previous 6 hours. And what did that do? It set up the up move. See, what is it? It's information. See, we're feeding you information you can't get any other way. And you say, well, yeah, but you got one down here to the downside. Why did that come in? I'm on a 10-minute. That's where you count. Yeah, you want it on the 10-minute chart. It's designed for the 10-minute chart. All right. If you don't understand that, go watch the video on it, Mosin. All right. What was the purpose here? A banker said, we got to get lower. We got to go find the sellers. He put enough money in it to get it to this bottom so that he could find the buyers to go up. See? All right. So our charts are amazing because they're going to feed you information that you're not going to get on any other chart because no other chart has this stuff. No other chart has the ability. And to my knowledge, we're the only people on the planet who have figured out, and it wasn't me, it was Jerry, how to figure out momentum, how to find momentum, because you can't measure volume in the forex. There's no single place where all the trades take place. All right. It's all over the counter. And so how do I know when money's coming in? I know when it's coming in. I know. And then we didn't know anything about 55 pips till we got the white dot. And then when we saw the white dot showing up, we went, oh my gosh. When the white dot shows up in an overlapping market, now it could happen like over here, this is all dead stuff. So it doesn't take much money to be more money coming in than the previous 6 over here because it's sideways. Right. But over here, right, we know that they're going to try to go 55 pips. So we measure it. And they try to go 55 pips. That's what they're trying to do. When we go over here, you'll find a lot of them. You know, once you get a big move, yeah. $55 pips. Missed it by 2 pips right there. Here's another one down here. 55 pips. 55 pips. Right there. And that's how we learned about 55 pips. Didn't learn that from anybody else. We learned it because our charts revealed it. No, we haven't done that. No. When you see a white dot on the 10-minute chart in an overlapping market, all right, so London and New York are open right now. That's an overlapping market. All right. Then once London closes here in 12 minutes, all right, London's going to close in 12 minutes. Now, we don't have an overlapping market until we get to the Asian and the Sydney, all right? So anything that happens in between now and the Asian and Sydney, it doesn't matter what the white dot is, all right? But once it shows up, that means more money came into this candle right here than the previous 6 and I'm on a 10-minute chart, but this is brought to you down from the 60-minute. Jerry found a way to take the information from the 60-minute chart and put it on a 10-minute chart for the retail trader. So once he sees the white dot in an overlapping market, especially in the beginning of the market, the first 2 hours of the thing, it's going to go 55 pips. And that's how we learned that bankers have to have 55 pips. But then we had to find a way, well, why did they go 55 pips? Why do they care about that? And the reason is the Fibonacci sequence. The 55 is right there. That's why, because they can't trade for 30 pips. They can't trade for 20 pips. They're trading millions and millions of dollars. At 55, they now have permission to trade. See? So it's all about taking all this information, and that's how we created this methodology. All right? It comes from bankers and information bankers have revealed in the charts that no other charts will show you. All right? That's why they're amazing. So you pay attention. All right, so over here, let's see, we're looking at New Zealand yen. All right. So see here's one right here. I'm on a 60. I'm going to get out of that 10. All right. So down on the 10, you can see on top, on the bottom, they thought maybe they're going to push up. No, we're going down. Okay, they did a flag. All right, here's the right here. We're going 55 pips from that line if that's an overlapping market. And that is in the Asian market right there. All right, so this is why they went down and didn't go anywhere, because they're waiting for London, which is over here. But they'll still do if they start it, they're still going to go 55 pips. All right, now, why didn't they get here now? Because of the channel. So what was the purpose of putting money in up here? The purpose was to get to the bottom of the channel where they would find buyers who would love to take the trade. Well, here they are. You see that? What told you all that? All that, the chart tells you that. All right, we got money coming in. We got a sideways move. Where are we trying to go? We're trying to find the buyers. Here they are. Here's a close and reverse. All right, here's another close and reverse. Here's a close and reverse. Here's a close and reverse. Here's a close and reverse. All right, remember, 5 to 7 pips below that, I can take any one of those for that trade. And I'm risking 5 pips to make that. That's why you go, once you got your 100 hours done on pulls and pullbacks, then you go work on close and reverses, because now you'll get the least amount of risk for the highest amount of reward. See, it's not rocket science. All right, how long does it take? 300 of everything, and close and reverses, it'll probably take you 1,000. Well, I just did 6 or 5 right there. How long is it going to take to do 1,000? Well, 4, like that. And you don't have to get fancy at all. All right, you can pull up. Let me pull it up here. All right, so you can just take a little legal pad. Here's one, right, like this. See, the trader pulled this, sent me this. I took his name off. All right, so here he is, just took a line, Fibonacci retracements. Okay, and he just started marking them. How many went to that one? How many went to that one? How many went to that? Now here's the data. 4% pullback to the. It doesn't say. All right, just to break even. 5% pullback to the 214. All right. 20% pull back to the 382. All right. 15% go to the 500 and 21% go to the 618. So you can see right in here, 20 plus 21 is 41 plus 15 is 66%. All right. 66% of the time, the currency is going to pull back to a number you can trade. All right. See that? That's what that means. If it goes to the 214, I can't trade it. But if it goes to the 382, I can go. And 66% of the time, it's going to go. All right. Now, at the 214, the 382, only 20% will go. But at the 618, only 21% go that high. At the 50, 15% go that high. All right. But combined, any one of those three is 66%. All right. Now I know the statistical probability. Now my left brain can look at it and get a pullback and it goes, should I take this? Yeah, it's 66% going to go that way. What do you want to do? Leave it on the table? No, that's how, what? The odds are in your favor. Do you know where it's going? Nope, I don't have a clue where it's going. I know where it's trying to go, but I don't know if it's going to go there. All right. So what am I doing? I'm putting the statistical probability in my favor. Let me show you one other thing. Then I'll do I'll just pull over here somewhere where I get blank stuff. I want to. All right, so here, right here. All right, now I just went to somewhere I don't know. From the edge of this screen right here to this screen right here, over here is 34 hours. All right. So in 34 hours, we've done every single market plus an extra 2. All right. Now, in the course of 34 hours, let's see how many candles did not retrace. All right, so we'll put it over here, so I can see it. All right, so I'm starting over here on the left. I'm looking for candles like that. Did it retrace? Yes, it did. All right, over here, it pulled back. It goes over here. Here's another big one. It pulled back there. Here's one here, but it pulled back there. Here's one here, pulled back there. All right, over here, all these pulled back. And that one pulled back right there. Coming down, this one pulled back right there. Here's one here, it pulled back right here. Right here, pulled back there, right here, it's pulled back already. All right, on this chart, in 34 hours, not one candle didn't pull back. Not one. So should I wait for the break hook and go, which is the pullback on the candle? Right? Now, typically you'll find it's about 98 to 99%. I just happen to pick an area where there weren't any. Right? So how do I put that statistical probability to work for me? I know that every candle, virtually every single candle, is going to pull back. All right. Therefore, when I get a break up here through here, what do I know? 99.9% of them are going to pull back. I'll get the hook. All right. Now, as we go over here, we suddenly find this candle did not pull back. See, that is one right there. This one pulled back. See, that big, it pulled back. So there's one right there. Then we got a gap. All right. So, and now we're looking at 45, 50 hours. And in 45, 50 hours, only one candle on this chart did not pull back. Only one. What if I'm in a bad trade? It breaks my bailout zone. Oh, what do? Do I just jump out? No, it's going to pull back. All right. So let me just illustrate that. And then I got to do this. Hold on. All right. So I see the pullback. Why? There's a big candle. It's going to pull back. Did it pull back? Yeah, that's my opportunity. And there's a close and reverse right there. Oh my gosh. All right. So what's my risk? It's so easy once you know. Here's my risk. Here's my reward. Here's the risk. Here's the reward. What's that? 1 for 10? I'm risking $10 to make $100. I'm risking $100 to make 1,000. That's a no-brainer. All right. What did it do? Break hook and go. Why did it do the hook? Because every candle retraces until they can't. And that's what's happening here. Once they get enough buyers in this case, they just rock and roll it right in here. See, there's the big move. Then what I got to do? Oh, well, it's got to retrace. There's the retracement right there. And then what does it do? Does that up there. See, it's all in the charts. What do I got to do? I got to do this, what I'm doing right now, one piece at a time, 300 times. All right, so Mosen said I did 300 and 75% went to the 1270. So what Mosen knows is if I get a pullback to a 382, a 50, or a 618, 75% of them are going to go to target to the 1.270. Now, how easy is it to do risk for reward? Here's my risk. Here's where the 1270, here's my reward. I'm risking 1 for 4. No brainer, take the trade. Now I'm risking 1 for 1. And I'm not really excited about that. Could I trade it? Yeah, it's 1 to 1. I got to have a minimum 1 to 1, but I'm not really excited about it. See, I'm looking for those trades that I can put money in and make 3 times my money. And when you do that, if you do that, you don't have to be the best trader on the planet. Right? So if I'm going for a 1 to 1, risk 30 to make 30, I break even at 50%. I lose 100, I trade 100 trades, I lose 50, I gain 50, I'm break even. If I'm going 2 to 1, I only have to trade at 40%. I can lose 60% of my trades and I'm still going to be profitable. 3 to 1, I can only have to be right 1 time out of 3 and I'm still profitable. 5 to 1 down here, I can lose 8 out of 10 trades and still be profitable. If every time I trade, I'm looking for 5 to 1. So we're always looking for this 3 to 1 right in here, right? That's what we're looking for. And how do we do that? We do that with the snowman, which means we maximize the opportunity. All right? Trade 1 is 1/3 of my lots. Trade 2 in the biggest area is 2/3. Now what am I doing? All right? Well, my percentage of wins is going up, yeah, but most importantly, my average pip capture is growing like crazy, right? Because I'm no longer grabbing 5 to 8, 10 pips. Now I'm grabbing 140, 150. If I'm getting that every day, I'll easily have 35 pip average pip capture. All right? Now you're going to have losses, don't forget. You can't win them all. That's why you keep your losses small. Don't ever do this. Oh, I hope it's going to come back, man. Don't do that stuff. Click it out. Be a disciplined trader. Get rid of that trade. It's bad. It's all when you do it, Mosen. There's no average. All right. It's when you do it. That's the average. You can take it any day. You can do it again, and you might find it at 77% the next time you do it. It depends on what the market, where you are in the market. But the number is, that's why it's got to be your number, not my number. I have my number. I did the work. That's how I know 82% on a MACD cross with a T3 is going to go 82%. Why? Because I did my number. All right. But Abdul, when he did it, it was 90% for him. He was 8% better than I was. Well, I did mine years ago. He's done his now. All right. All right. Let me do a session recap here.
Recording stopped. Recording.
All righty. It's a session recap for the 11th day of October. And this morning we were watching the dollar index, and it attempted multiple times to break through here, but it has not broken yet. So we still have a flag pattern in play, but the flag is indicative of the continuation to the downside. All right. We have a downtrend, or actually a down channel right here. All right. We're making lower highs, lower highs, lower highs, lower highs, lower highs. Okay. See? So that's where we're trying to go. And MACD says, and by the way, we're trying to do that also. So we're looking for dollar down. All right. Now that means the correlated currencies will go up. Euro dollar should try to go up. Well, surprise, surprise, it's trying to go up. We don't have 55 pips left. That's all we got. The target is at 106.55 up there. And let me pull the ATR up here. And euro dollar has an ATR. Oh, right there it is. Euro dollar, 73 pips. All right. All right. Over to pound dollar. Pound dollar should be trying to go up. It is. With dollar going down, our target is up here at 23.62. Too late in the day to trade it. We did get back down here to 55 pips, but we can't trade it now because it's not going to move until London tonight. That's 12 hours from now or more. All right. So you don't trade it. Target right now is 23.61. But after 5 o'clock, you're going to get a new ATR. All right. And that new ATR, hold on, let me make sure this stays up. There we go. All right, pound dollar ATR is 91 pips. Dollar Swissy. Dollar Swissy, as you can see, it's mirroring the dollar. They tried to break out. We're not successful. They're back up here. Our target is down here at 89.81, holding for 89.69. Right down there, Dollar Swissy has a 74 pip ATR. Dollar yen, all right? Dollar yen is a little wishy-washy this morning, and so we stayed out of it, all right? It's going up, but dollar's going down. So our thought process is the only reason it's going up is to find sellers. Where might they find sellers? Right there is where they may find sellers for the downside move. MACD tells you you're a seller. However, MACD also says, by the way, we have divergence, all right? We had divergence here. We now have convergence to the upside here. So we could break up there, right? And we have FOMC today at 2 o'clock. That's right. So everybody's waiting for that. We'll see what happens after that. All right. So wait. This is wishy-washy. Don't be in a hurry. They've got a 95 pip ATR. Over to Aussie dollar. We tried to trade this all morning and would have traded it had it broke this line to the upside. It still hasn't done that. They're currently still in a flag pattern to the downside. Why? Well, dollar's not moving, so they're not moving. All right, we're watching for a bounce, and right now our target is at 64.69. All right, and Aussie dollar has a 68 pip ATR. Wait for 5 o'clock, you'll get a new ATR, and then find that it's around 68 pips. And if dollar's going down, look for 68 up. It's not rocket science. Euro yen. All right, we talked about this morning. Yes, that's the target, but they're going to slam into the channel before they ever hit that target. So what are they doing? They're exiting their trades right now. That's why you have a close and reverse. What does a close mean? Close the buy and go into a sell. It's still green. There's still buyers trying to buy it to the target. But the candle is going down, which means the bears are overwhelming the bulls. All right. So euro yen ATR is 119 pips. Pound yen, all right? Pound yen almost the target right now. Right there it is at 184.08. Let me take it to a 60, easier to see. There it is, right there. All right. Watch for them pull back and go again. After 5 o'clock, you're going to get a new ATR. Pound yen has an ATR of 146 pips. Wait for that. All right. But you do have 55 pips or more now. If it makes a turn, you can. It's late in the day to do it. But there is 55 pips as a target, but so time of day is not with you. All the participants have already left the building. They're at the pub right now drinking a Guinness. All right, we're stuck inside this triangle here, looking for this breakout up above here. New Zealand dollar has a 62 pip ATR. That target is at 0.6070. After 5 o'clock, you'll get a new ATR. It might be slightly higher. Over to Aussie yen. All right, Aussie yen. We could trade this if we got. Unfortunately, it didn't get into play. All right, because this is trade one right here. This is trade one, and this is trade two right there. All right, so we never got into that area. Right, but it's very dangerous because this is the range top right here. So trade one only makes it to the range top. Trade two is up here. All right, so it can be traded, but you better you need a little skill so that you have the confidence to know what to do if it doesn't work. All right, target is up here at 96.43, and Aussie yen has a 98 pip ATR. Euro can't trade euro pound. No, ATRs are too low on it. Aussie, however, we're 2/3 of the way to target. Our target is 65.85. We missed this pullback here. The only reason we didn't take this trade is because traders didn't take it. We talked about a break, hook, and go, and then when it did it, nobody had taken the trade, so we couldn't count it. Otherwise, we'd be up 40 pips right now, looking with trade two already in. Target is 69.85 up there, and Euro Aussie has an ATR of 127 pips. All right, over to Pound Aussie. All right, Pound Aussie headed up. There we go. And almost the target right now is at 92.32, and Pound Aussie has an ATR of 142 pips. All right. So if dollar keeps going down, you see dollar's trying to go down, it's trying to go up. It's most likely coming up to the range top tonight. Got a big ATR, so we can get there. All right. Euro New Zealand. All right, almost the target right now, which is right there at 76.66. And Euro New Zealand has an ATR of 138 pips. Pound New Zealand, to the pip to its ATR. They've already sold off. See the close in reverse? What does that mean? They closed the buy and went into the sell. See that? All right. So that's what happens. To the pip to its ATR, Pound New Zealand has an ATR of 151 pips. New Zealand yen, all right, New Zealand yen, we're waiting, let's see what we're going here, going up, not down, I don't know why, oh yeah, all right, New Zealand yen, we're going up, 90.42, holding for 90.49 up there at the 1,000 fib, and New Zealand yen has an ATR of 93 pips. Nice little currency. That's a really nice little trade right here, folks. If we get it, remember Sydney is next, so you may get this trade. You can see the trade right there. You can see that trade one is here to the 90, and trade two is a break of the 90 right there. That's a beauty. If you get that, don't miss it. That's nice. That's a big if. All right. So, all right. Over to Aussie Swissy. I can't trade Aussie Swissy. ATR is too low. Same with Aussie New Zealand. Up to Pound Swissy, and Pound Swissy, we have it up. But as soon as it breaks here, it's going to slant. It doesn't have any room up here. Wait for 5 o'clock. You'll get a new ATR. It's only 58 pips, so you only got 3 pips to play with in there. It's really hard to trade it. It can be done if you get it exactly at the right spot. Right. All right, there we go. Now, for those of you, if you've got it, taken a demo, you got an IC like this, and you see over here, you'll see must see video. So, and here that tells you how we're doing all this stuff. Here, this is the session recap. So later today, this is yesterday's. It'll be right in here. Now, if you don't have that, you just log it into the Academy. It's also in on the New York page, not the New York login page, but the New York recordings page. All right. Anybody got any questions? Last minute questions before we close her down? Went a little longer today, but we had some, I think we got some. Was it worth it going a little longer today? Was it worth going a little longer today, even though we didn't trade? Did we pick up? Okay, good. All right. Totally. Okay, good. All right, on CryptoCat, remember, everything we're doing here works in Litecoin, Bitcoin, all that works totally in it. Yeah. Yeah, I try to not get political, Joe. Sometimes it's hard. I happen to be privy to a lot of information that most people aren't. So I know a lot of things. If you're watching mainstream media, you're watching a show. None of what they're showing you is real. None of it is real. Right? So, it's tough. I never will. Yeah. All right. Let's see. Fast trackers. We need to go to market analysis this morning. Fast trackers, yes or no? Bill, yes, you want to go to fast track? Market analysis, Bill? Oh, okay. You're just responding to the last one. I got it. Okay. Fast trackers. Oh, if possible. Okay. Yeah, we'll go. All right. We're going to market analysis fast trackers. I'll see you in there in just a minute or two. Everybody else, I'll see you tomorrow. Remember, FOMC is today. Be flat this afternoon. Yeah, right.